Welcome back to Accounting Recounted. I'm your host, Amanda Hendren, and in today's episode, we'll be diving into the recent economic outlook for the United States as revealed in the latest quarterly survey by the Association of International Certified Public Accountants, also known as the AICPA. So grab your headphones and let's get started. I gathered the information in this episode from an article written by Brian Strickland in the Journal of Accountancy. I'm going to summarize it in this episode, and I will link the article in the show notes so that you can take a look for yourself if need be. So, according to the Business and Industry Economic Outlook Survey conducted by the AICPA, 43% of respondents are now pessimistic about the U.S. economy. This is a notable increase from our previous quarter, which was 34% pessimism, though it didn't reach the second quarter levels of 56%. So let's start by unpacking the key findings of this survey. The survey, which polled 316 CFOs, CEOs, and controllers between November 7th and November 28th, highlighted a shift towards a more cautious stance. Interestingly, despite this, optimism about their own companies remained relatively steady at around 43% in fourth quarter. So, why are decision makers more cautious about the overall economy while maintaining optimism about their own companies? Tom Hood, who is SEMA's Executive Vice President for Business Engagement and Growth, recently said in an interview, quote, "We're seeing some softening on the hiring front and in IT spending, which are classic areas of belt tightening in uncertain times. However, decision makers seem to have more confidence in their own organizations, possibly due to a closer understanding of their internal operations and strategies." Beyond just sentiment, the survey delves into specific economic indicators. For instance, 16% of respondents with too few employees are still hesitating to hire, marking a 2% increase from the previous quarter. You may be wondering how this hesitation aligns with broader economic trends. Well, this hesitation to hire is reflective of a cautious approach businesses are taking. It's not uncommon for organizations to be more conservative in their hiring practices when the economic uncertainty is looming, right? The current economic climate, is indicated by the survey, seems to be influencing decision makers to pause on expansion and hiring initiatives. Speaking of expansion, the survey reveals an interesting dynamic regarding companies' plans for the future. So, despite their economic concerns, 51% of CPA decision makers in companies with less than $10 million in annual revenue express plans to expand over the next 12 months. And then on the flip side of that, larger businesses with more than $1 billion or more in revenue saw a dip in expansion plans from 57% to 46%. So what can we infer from these contrasting figures? Well, it seems that smaller businesses, perhaps buoyed by resilience and adaptability, are more optimistic about expansion. And on the other hand, larger corporations might be taking a more cautious approach, possibly due to their scale and the potential impact of economic fluctuations in their operations. It's a reminder that economic dynamics can affect businesses differently based on their size and industry. The survey also sheds light on the list of top 10 challenges that CPA decision makers are currently dealing with. Of course, inflation and domestic economic conditions regained the two top spots, moving the availability of skilled personnel to fourth on the list, which had been the primary concern in the previous quarter. It's a notable shift and one that aligns with broader economic trends. Inflation has been a persistent concern, and its return to the top of the list reflects a real impact that it has had on these businesses. Additionally, the reshuffling of priorities indicates that decision makers are closely attuned with the evolving economic landscape and are adapting their strategies accordingly. To me, it's interesting that inflation, which has obviously been a long-standing concern, has once again taken center stage. The survey provides insights into the specific aspects of inflation that are causing the most apprehension. So, the survey highlights that decision makers see labor costs as their primary inflationary risk factor, with a survey high 39% identifying it as a top concern. This is a significant shift from a year ago when concerns about energy and raw materials costs were more prominent. It suggests that the current economic climate is having a specific impact on how businesses perceive and navigate inflationary pressures. Let's zoom in on the hiring landscape for a second. The survey notes that staff turnover fell from fifth to eighth place in the list of top challenges. Meanwhile, 12% of respondents reported having an excess of employees, up 8% from the previous quarter. So, how do these findings reflect on the current state of the job market? Well, the lower level of concern about staff turnover is an interesting observation. It could be indicative of an environment where employees are less inclined to leave their current roles, possibly due to the economic uncertainty that we're talking about in this episode in the first place. And a lot of employees obviously want that job security, so they might be less inclined to leave. The increase in organizations reporting an excess of employees might be a result of businesses adopting a wait and see approach, kind of wanting to hold off on significant workforce adjustments until the economic landscape becomes a little bit clearer. Right now, it's kind of a guessing game, right? So the economic uncertainty is influencing not just hiring decisions, but also employee retention strategies. It's kind of a ripple effect where businesses are adjusting various aspects of their operations in response to the prevailing economic conditions. Wrapping up our discussion, the survey points to decision makers estimating a 0.5% increase in company profits over the next 12 months, up from 0.1% last quarter and negative 0.2% a year ago. So, what can we infer from these profit projections? A positive shift in profit projections suggests a cautious optimism about the future, right? So while numbers are modest, they indicate a belief among decision makers that there could be an improvement in profitability over the next year. It aligns with the nuanced outlook that we've been seeing throughout this survey, where businesses can express both concerns and optimisms in different aspects of their operations. All right, guys, that wraps up today's episode of Accounting Recounted. As always, my goal is to keep you informed and engaged with the ever-evolving business landscape. If you enjoyed this episode, please be sure to subscribe, leave me a comment, and don't forget to tune in next time to Accounting Recounted. See you next time and have a great day.